What is up? What is up, you guys? I'm going to be going over price action today and how I made $832. But first, before I get into it, I just want to talk about price action lately and how bad it's been. It hasn't necessarily been bad price action. A lot of people can still trade it with their models and be good. But just look at these ranges. The volatility and volume is not very good. We're kind of just in a pump and dump market, as you can see. We ranged, just inchworm around and then dump. And when we are making big moves, the retracements are really robotic and algorithmic, up, down, and that's not really what we're used to trading. It's not there's a lot of pullbacks that will stop you out break even. A lot of people are getting broke even. Right here, if you entered off the 1 minute inverse, probably would have gotten break even up here when we edged this high, and then you would have gotten stopped out right here, break even. So just keep that in mind. Don't crash out, bro. Don't be like me and blow your XFA. But just keep calm, cool, and collective. Stay disciplined on the charts, because if you can get through times like this is what's gonna make you a trader that is gonna make it to the top, and this is what's gonna make you what you want. BSing around and having little patience, and I'm talking about myself too. I struggle with this, and taking trades just for fun, taking trades just like you're Steph Curry, shooting random shots. You're not gonna make those, bro. You are not gonna make those. There's no reason to be doing that. I was just talking with my boy Wyatt today. Wyatt trades the same model as me, and our patience hasn't been good lately, and that's been killing us. And it's what you need to be doing, but the way that your human brain is, it's just hard to do that. You have to realize that literally our brains are millions of years old, and they're not wired to work like this. They're not wired to be input based result thirsty. You're looking at a chart where you can press two buttons that can either make or buy you money. You're literally why would I not press it right now? I'm not seeing what I'm happy about, so why would I not just at least try something else? But no, you have to hack your own brain and realize that that's not what this is about. It's about you literally have to be a computer, because you are working against computers. You're working against people way smarter than you that have way better discipline, and you're not gonna be profitable. You're not gonna make any money. You're not gonna retire nobody. You're not gonna buy any supercars if you are sitting on your phone while you're trading, playing Clash of Clans, doing something else. You need to have the attention span. You need to if you are getting off the charts every day and laying in your bed and scrolling on your phone, literally just hang it up, bro. You're cooked. You are cooked. That is so bad for your brain. It's almost like porn, jerking off. That stuff is so bad for you, and you guys don't even realize it, bro. And it cooks you. Everyone does it, bro. Literally everyone does it, but you don't realize how much it cooks you. It's literally just feeding your brain dopamine, and it's not getting anything out of it. So when you have to focus on something like this, a hard task, you can't, bro. And you mentally hijack yourself, oh, I can't focus on this, so I'm just gonna spam the buy button and go in with 4 minis and just hope for the best, and maybe I'll pass the account. What are you gonna do after that if you pass the account? If you didn't have the discipline to trade on a combine, you're not gonna be able to do it on an XFA, bro. It's not gonna work. It's not gonna work. All right, I'm done yapping. So off of market open, let's go up on the time frames real quick. Okay, so let me pull up my trading view, because my trading view has, bro, I still have a little shortcut for Figma IPO. That's crazy. If you guys know what the Figma IPO is, you're a real one. Robinhood IPOs. Alright, anyways, off the rip, what did we come down here and do? If you guys don't have stuff on your charts that tell you this, it's important. Key levels like monthly opens, weekly opens. We came out and tapped the monthly open. We're coming back up. This is a protected low now, especially because we've made this low, came above it. We now made an SMT with that protected low. So now we're expecting bullish. We want to see a nice V shape up out of here, because if we don't, then we don't know what the reaction is going to be off of the PD rays that are up here, like the 15-minute gap, stuff like that, this high. But this is exactly what we wanted to see. Just a swing, or a nice push right up it. So off the rip, we're down here. I marked this out just to, like, for hoo-ha's, just like tape reading it. You could take the 5-minute inverse right here, but we didn't take out this low right here. We left it. There's like some equal lows right there, so it's just like meh. And like, you never know with the market open, like there's volatility all over the place. Anyways, we have really good volume coming up. We come up to here. This is around 10. Actually, I took a trade in here. I took let me go on the 1 minute. I took like a Jackonomics type trade. If y'all know Jackonomics, he's the GOAT. Yeah, so I marked out all these equal highs right here. Super easy target. We were flushing right to them. So after getting like 1 minute confirmation, seeing that we're respecting the 1 minute candle bodies and just pumping up, this was kind of a risky trade. I'm not gonna lie, probably shouldn't have taken it. But I entered like right here. Just put my stop at this low and targeted those and secured like some money right away. And then another reason why like taking trades like right off the rip isn't good for your brain is because now you have a cushion, bro. You're like already up 500 on the day or whatever, and you're telling yourself like, oh, I can like lose it and like it won't be an issue because like I'm still waiting for my A+ setup, bro. Like, what if you don't get it? Like, you have to think the same every day. You can't think about it like a child, and I have a problem doing that. So I'm just like getting it out there to tell you guys, like, I'm no better than you. If you struggle with that, trust me, I'm no better than you. But it's important that you realize it and work on it, and that's what I'm doing. So we're going to go over it on TradingView just because it's a little easier, in my opinion. So, yeah, don't really pay attention to that trade. Anyways, a lot of people stopped being bullish after we ran up past... What are we doing here? After we ran up past and took London highs, all that, it's safe to say that we could go down now, but there's really no reason for us to go down or stop going up yet, if that's how you want to think about it. The next thing that we could target is like fib levels, just like ranging off of like how much we're moving, saying, all right, I don't think we're going to go up anymore. But in these market conditions, we've been making some pretty big moves literally for no reason. Anyways, we have this 15-minute swing high right here all the way from this Wednesday, this 15-minute intermediate term high. Might seem insignificant, but you got to think of it as like almost like a break-even point if you were in a trade long term, if this is a buy model. This is a point where we're like, all right, if it hits here, I should probably hop out for the day. It's not certain that I'm going to get an entry and just don't really know. So mark that out, and you can try and get an entry to that, because there's not really a reason for us to stop going up yet. Like, we're still bullish, we're delivering good, still have good volume, and as you can see, after we take that draw, we chop up. That's why I was hesitant to target it. So anyways, let's get into the trade. First thing I'm going to mark out, 10 a.m. open. Right here, just like literally, there's like the horizontal line thing. You can do that instead. I'm not, like, if you're not an idiot like me. So that's 10 a.m. open. We open right there, candle body. My friend took this against me, so it was like we were trading against each other. It like souped out, 10 a.m. open, came down. how you can look at this is the 1 hour candle. So if the 1 hour candle opens up right here, it's 10 a.m. 10 a.m. is like an hourly candle, so it's important. It's going to determine the direction of what we do. If you have to think of it like sessionally too. So like if New York AM session was a manipulation, we came down and moved up, is 10 a.m. going to be a continuation candle? Is it going to reverse? We don't know. If we have PD rays below us that haven't been filled yet, and 10 a.m. brings us there, and then we get signs of reversal back up, that means that we are having a higher time frame continuation. So it's a low time frame reversal, but you are technically trading a continuation. So 10 a.m. opens, might come up a little bit, do whatever, but it comes all the way down. This is like what it would look like. Jeez, bro. Yeah. Bro. This is hilarious. Alright, yeah. So it's coming down, like, this is how it psychs people out. Like, oh no, it's coming down. But no, it's manipulating, grabbing what it needs to do to go back up. And in hindsight, it's going to look like this. It's just going to be a big candlestick up. And it's going to have a wick. Comes down, look. Key level. PD rays in there. Anyways, I don't know if that was the best way of explaining it to you, but let's look at the hourly candle. Shit. Hourly candle right here. What did we do? The hourly candle actually brought us all the way back down to... Wait, am I tripping? Yeah, it brought us back down to midnight open price, which is another good sign. I know a lot of people don't have that on their chart, but it's a good idea. We come down and then come up. We didn't come up a lot, but we made the manipulation for us to come up. So now let's dive deeper into it. We can't just enter off of just like nothing. We need a point for it to turn around. Let's look for 5 and 15 minute gaps, because that's what we look for a continuation model. You had one right here, you had one right here. A lot of people took this trade. So we were in a 5 minute gap right here, 1 minute inverse. The reason why you maybe shouldn't have taken that is just because of the size of like the move that we just made. We're looking like if it's a bigger size move, you can expect for us to need to come back into a 15 instead of a 5 minute, or something that's a little bit more premium. So if this is our range right here, if this is our range and this is premium right here, this gap is in premium, so that's why it worked out. But this one wasn't, and if we go on the 5 minute, this one definitely wasn't. So that's why it didn't work in that situation. The only way I would take one right here is if it was like a perfect A+ setup, but this wasn't really. It was just a retracement, 1 minute inverse. I don't think there was even like any prominent SMTs. Yeah, not really. Yeah, no. Yeah, so anyways, and then we tap into the more discounted 15 minute. Always have these marked out. Tapped into the midnight opening price range as well, which is even better. Boom, now we're looking for an entry. What do we have? 1 minute, that gap right there. There is one. There's also a 2 minute. Not a 3 minute. So the highest time frame gap on this leg would be 2, but I did not take that. I took the 30-second because I saw this like little retracement right here, and it looked like there was an extra leg in there that you needed to zoom in on and go down a time frame. So let's grab my, where is, oh, it's right here. Okay, so if we go on the 30-second, you see that we have this leg right here. There's even another one right here. So this was these two stacked fair value gaps, which was what I felt like was a good entry and was going to get me in at a good spot where I didn't have to worry about getting break even, stuff like that. As you can see, you would have gotten broke even if you took the 1 minute, because look, we come down right here. Unless you were targeting external draws and went break even right here, like that's good. And still you might have even gotten broke even if you were trailing your stop. So you have to think about that stuff. Anyways, enter on the 30-second inverse, break even at these internal highs. PB Blake went break even right here, which maybe I should have done. That is like really risk off, and it's like seems like a good thing to do in these markets right now because they're so choppy, and definitely could have got chopped up before hitting this point. But we pumped right up there. I went break even. It was a risk-free trade from there. Got a little scared right here, but we inversed it back up and pumped right up to TP, and then we hit my final draw. So that's pretty much it. Yeah, just focus on risk management right now, bro. If that's one thing I could say. If you don't know what to focus on right now, if you don't know what to do, just think about your brain. You can't always better your skills because like you're going to cap out at some point and you're going to get like analysis paralysis. The one thing that you can always get better at is just habitually having good discipline, never stopping. And it's just going to make it better and better. You have to have good discipline on the charts and outside of the charts. You can't be doom scrolling on your phone. You have to be it has to go both ways or it's just never going to work. All right. Like, subscribe. Super appreciate it. Peace.